You're back on Morning Movers watching shares of Amazon today. They are a little changed this morning, but B of A boosting its price target on the tech giant to 248 from 230 and keeps its buy rating. The new price target would indicate a new all-time high for Amazon. B of A expects Amazon to leverage robots to reduce labor dependency, increase order accuracy, and improve warehouse efficiency, driving material cost savings. Keep in mind, Amazon rallied 11% in May. Time now for Options Corner. Joining us to take a deeper look at Amazon is our very own Duke of Data himself, Rick Ducat. All right, Rick, talk to us about the trends that you're noticing when it comes to this chart for Amazon.
Yes, Amazon and its consumer discretionary sector, both fairly close to the S&P, outperforming it a bit. We can see one thing that sticks out to me, though, is the tight correlation between Amazon and the S&P 500. Look for that relationship to start to break down. That would be an interesting potential signal to keep in mind, because you might expect them to return back to their high level of correlation eventually. So just something to keep in mind going forward. Now, if we were to look at our candle chart, we can see that, like so many charts that we've seen recently, a high point here late in or early in the beginning of 2025, a large decline, bottoming out in the heat of our tariff news cycle, and then a recovery here. Now, though, we are stuck. You can see here that we had a notable high point near 206 that price made a brief push beyond, but we have so far not really been able to make a big convincing push to the upside there. Also, we did not clear this 216 level, high point and subsequent low point, so that's another resistance area to watch. Plenty of support to the downside, though. Short-term trend line and all three of our moving averages here between about 195 to 200.
Okay. All right. And then, Rick, what are you noticing about volume recently?
Sure. If we were to assess the volume profile study for this stock, we can see that our point of control, the area of the heaviest trading, all the way down here near 188 or so. So that's a significant area to watch, but we've moved beyond it. Now there's two smaller nodes, one here near 200, one here near that 206 level that we highlighted earlier. So a move beyond this old high and this high volume area could be significant here, with the sights eventually set on 216 and about 230. 230 also being our +1 standard deviation channel. A quick glance at our long-term chart too shows that that 188 level, that's a notable old high that we saw from back last year.
Okay, and so it's okay. I know it's Monday. Listen, what's the approach then for an example trade here for Amazon?
Well, we've got a bullish note. If you look at the June options expiration, there's high open interest on the call side at 200, 210, 220, kind of that general area here. So this trade, example trade here, would be a bullish call spread. Plus one June 20th, 210, 220 call vertical at a 235 debit. So a bullish trade here, 18 days to expiration. Looking for a push beyond the break even of 212.35. So that would need about a 4% move to the upside, roughly 1 to 3 risk reward, kind of a conventional risk strategy here. And the expected move for that June expiration series, that about lines up with that 220 level, our short strike there. So, that would be saying that it would be beyond the expected move to go above that level. That seemed like a reasonable place to try to cap our profits in exchange for defraying some of the cost of that long option here. So, as often is the case here, you want to do a risk-defined trade. This trade has a max loss of 235, which is the debit paid. You might even be able to get it a little cheaper if Amazon's weaker at the open.
All right, that's an example trade for Amazon. It's a bullish call spread for that. That's our Rick Ducat, lead market technician. Thank you, Rick.